Good afternoon. My name is Maxwell Pack, the Chairman of Albion Enterprise VCT PLC. It's my pleasure to welcome you to the company's annual general meeting. I'd like to introduce my fellow directors, Christopher Burrows, Rodri Whitlock, Pippa Latham, and Patrick Reeve. May I also introduce Will Fraser-Allen, the Managing Partner of Albion Capital, the company's investment manager. Will shortly give a presentation on the results of the company for the year ended 31st of March 2024. Moving on to the formal business, the quorum for the AGM is 2 members entitled to vote in person or by proxy. I can confirm that this has been met, and therefore I declare this AGM open. The notice of the meeting has been in your hands for the statutory period, so I'll take the notice as read. As stated in the annual report, this will be my last AGM, as I'll be retiring at the end of this meeting, having served on the board since 2006, and I've had the privilege of serving as chairman during this time. I'm delighted that Christopher Burrows, an existing board member, will succeed me as chairman of the board, and I'm confident the shareholders will benefit from the continued success of the company under his leadership. Due to the success of the previous year's virtual AGMs, and to maximise engagement with shareholders, the board has again arranged for Lumi team to broadcast this year's AGM using its online platform, which enables members to interact fully, including taking part in questions and answer session and voting on the board's proposed resolutions. Before I hand over to Will for his presentation, I'd like to explain how the voting process will work. But let me first state that if you already submitted a proxy vote to the registrar, you do not need to vote again unless you wish to change your vote. The resolutions will be voted on by way of a poll. The votes received under this process will be added to the proxy votes that have already been received and verified by your independent registrar, Computershare. Once I declare the poll open on the Lumi platform, a list of resolutions will automatically appear on your screen. Please select the option that corresponds with how you wish to vote, and the option will change colour, and a confirmation message will appear to indicate that your vote has been cast and received. To vote on all resolutions displayed, select the Vote All option at the top of the screen. If you want to change your vote, you have the option to reselect your choice. I now declare the poll open. Turning to the main business of the AGM, following the manager's presentation, the directors and the manager will take questions from members of the company's financial results and proposed AGM resolutions. I'd like to thank members who've already submitted their questions and queries through to the chairman's email address. If you wish to ask questions, please select the messaging icon from within the navigation bar and type your question at the top of the screen. Click on the arrow icon to the right of the text box to submit your question. Please do so as soon as possible so that it reaches us ahead of the section. I will now hand over to Will Fraser-Allen for his presentation.
Max, thank you very much indeed. So as both said, I'll be taking you all through the results for the year ended 31st of March 2024, and the agenda is on the screen in front of you. And what I suggest is that I move on to the next slide. So if I just look at the sort of key high-level results, the net asset value at the year end had reached 125.77p, and that brings our total shareholder value, or the return to date, to 200.92p. So now over £2, which is good progress. The actual return in the year was 2.68%. Which is below our 5% target, but as I'll come on to, I think a credible performance in the circumstances of the year in which we were operating. And then finally, we have paid 6.28p of dividends in line with the company's dividend policy of targeting around 5%. So if I move to the next slide, worth just sort of setting the context of these results, because obviously that year to March was a year in which we were continuing to see quite significant macroeconomic challenges around the world, and sadly many geopolitical ones too. couple of wars still continuing. But what we have seen, I think, is an improving position, and indeed that has continued since the quarter end. So we have seen inflation falling quite significantly and very close to the target 2% set by the Bank of England. And whilst interest rates are still elevated, we have seen the first reduction, and hopefully that is a signal that they have peaked. But what's important is that the company continues to be invested in a portfolio that is targeting those mission critical products and services that their customers want, and that is partly how we provide resilience in the world, in a challenging world. What I will come on to in my final slide, and what we have just announced in the company's interim management statement, is that we've had a very good quarter one. More of that in due course. So if we move on to the next slide, let's just look at how those performance figures, those returns have been generated over time. So the 2.7% we talked about over 1 year, but where does that put us over longer time frames? 3 years, 26.2, 5 years, 32.5, and just under 88% for 10 years. So if we just think about that 10-year performance, and one should reflect more on the longer term returns when you're looking at a venture portfolio, which is by its nature volatile in terms of returns. If we look at that 10-year number, that's delivered just under 9%, when what our objective is that we can continue to pay a dividend of at least 5%. So we are decently ahead of our target dividend yield, which I hope shareholders will find encouraging even in these difficult times. We move to the next slide. Let's look in a bit more detail. Let's break down this current year's numbers just to give a bit more of a sense of what we're up to. Fundraising, as you know, we raise money each year in our top-up offers, and we raise similar amounts in the two years. And exits, I think, is interesting, and I will come back in a bit more detail on the exits, because as you'll see, this year we did generate 6 million of exit proceeds, and that is in the context of a very subdued M&A market, but more of that in a bit. In terms of investment rate, lower than last year, but still significant investment activity. So 6 new companies, and then a further 5 million into existing portfolios. And I'll give you a bit of a flavour of those in a moment. Share buybacks, broadly similar, and dividends is linked to a specific formulaic policy. So if we move on and look at on the next slide and look at how those, what are those drivers of the value increase. Firstly, egress, and some good news here is that egress was one of our top 3 investments in the portfolio, and on the 1st of July, so just a month or so ago, that was finally sold after going through a regulatory process, and it was a fantastic return for this fund, delivering 7 times our original cost. And what we were able to do was increase the value of egress in this period, and then it is, as you will hear, has increased further in anticipation of that exit. Provico, our children's medicine business, continues to trade strongly, but as in any venture portfolio, you do have companies that will have a more difficult time and will be impacted by the environment in which they're operating. So the two significant ones there were Threadneedle Software and Peak Data. And then if you look in, you'll be able to see in the annual report, there are, as is always the case, a number of write-ups and write-downs within the portfolio that I've listed here, the sort of key ones. And there's a lot more detail in the annual report for those that wish to dig into that detail. Moving on to the next slide. Portfolio, 56 companies now, sort of fairly similar to last year. Importantly, they do employ 4,500 people, mostly in the UK. That's an important measure of what VCTs do, is that creation of employment. But in terms of what the portfolio looks like in terms of the sectors in which we are invested, very similar year on year, and that's what we would expect as we look to build up a portfolio spread across healthcare and software. with a residual stake in some renewable energy businesses and some schools. We move on to the next slide. This is a slide I put in each year just because it's a way of giving a sense of the maturity of the portfolio. This will change. There's no particular targets, but it's just a way of understanding, the sort of profile of the portfolio. So if we look on the left-hand chart, and that's looking at revenues, you'll see that actually with some companies of significant scale now in the portfolio, there's now over 82% of the invested portfolio by value, not by number of companies, but by value, are now in companies with more than 5 million revenue. And indeed, 60% have more than 100 employees, which is shown in the right-hand chart. So very much a sort of point in time looking at the portfolio, but it does reflect the relative maturity of certain companies. And I've got a slide on that. So if we move on to the next slide, this is the important slide because it looks at the top 3 companies. And if a venture portfolio is doing what it's supposed to be doing, you should be getting those companies that grow very fast and become what we call outlier investments. And the top 3 will account for a significant chunk of the NAV. And it's an important point to make that we do monitor that concentration, but clearly it is also an important part of our delivering our return. So Quantex, Egress, and Provica are the sort of 3 big ones. Egress, as I alluded to earlier, has now been sold, so that will drop out of our top 3 next time I present. Quantex continues to do well. This is our business which uses data analytics and artificial intelligence to help companies manage their data, particularly around identity resolution. So used a lot by the big banks, but increasingly being used by governments and other sectors. So continuing to grow well. And then Provica is our children's medicines business, which now has multiple products on the market, and this has proved itself a platform for developing future children's medicines. So lots to be excited about in our top 3, which is clearly a significant portion of our invested portfolio. Next slide, please. It's an important part of our job to continue to make new investments, and I'll dig into a couple in detail. But we continue to focus on areas of B2B software and healthcare. And as I'll come on to, within that, we are doing more in climate tech and indeed deep tech. And I've got a couple of examples of that to give you a bit of a flavour on the coming slides. But the other ones on this, just open dialogue, which is using artificial intelligence to answer customer queries. We've got GridCog, which is one of our climate tech investments that helps corporates manage their energy assets. So a very large corporate might have multiple renewable energy sources, electric vehicles. It all helps with that planning. Kenic is software for non-bank lenders. So this is the rise in alternative lenders to banks. For example, might be car finance or other types of finance. And then finally, Mondra, again in that climate tech theme, helps companies, particularly grocery businesses, to manage their supply chain and really understand what the CO2 emissions are throughout their supply chain. A key part of decision making in how they source their product and how they report on their move towards net zero over time. But let me look at those 2 specific investments. So on the next slide, let me pick up Trifera, which is within our sort of growing climate tech exposure. And this is a business that helps, for example, landowners manage their what they call nature-based assets. So particularly this might be trees. So for example, you've got large chunks of forest that need to be monitored, and how those forests change over time is important, not least of which to make sure that they continue to exist and don't get chopped down. For example, it's very, very important when people are looking at the whole carbon credit markets. So providing verification that those trees that are the backing carbon credits exist and continue to exist. And this uses particularly satellite technology and AI to effectively map huge numbers of trees throughout the world, run by a very strong team, ex JP Morgan and UiPath, which was a very successful tech investment. We invested 7 million across all our VCTs, and 1.4 million came from this VCT. And if I move on to the next slide, we are starting to build exposure to deep tech. So this is technologies that will make fundamental differences and come up with a completely new piece of scientific endeavor that could change the world in which we live. And clearly, everybody on this call will be aware of the power of quantum computing and the enormous amount of work that is going into developing quantum computing and the enormous power that those computers will give us. And Phasecraft specifically is looking at the algorithms around quantum computing, particularly, for example, in terms of modeling new materials. This is a world-leading team, and the key part of deep tech is that we're creating really valuable IP that could give rise to very significant and positive outcomes for shareholders. So we invested 2.4 million across the VCTs, of which 500,000 came from enterprise. And that is what you'll often see as we go into deep tech. We will invest relatively small amounts early on and then back these businesses over time, because typically deep tech investments take longer to come through to maturity, but the potential upside is enormous, albeit there is more risk than in other areas of investing. So if we move on to the next slide, we continue to invest within our portfolio, and that's a core part of what we do. So backing companies and then providing them with further funding as those companies grow and as they succeed. So we put money into Panacea, Provica, and Gravity, all on the back of success. Next slide, please. Exits. I was pleased to see exits in this year. It's been a year characterized by a very slow M&A market. So it's a sign of a healthy portfolio that despite that, we are able to continue to make realizations, which is an important part of managing liquidity within the VCTs. So we sold our investment in Ophelos, and Ophelos was used machine learning to help manage customer debt in a kind and ethical way, and that was sold to Intrum, which was a Swedish listed business. Total investment by the Albion VC is 3.2 million. We made a 2.1 times return, and the proceeds to this fund was 1.1 million. So a perfectly respectable return. If I move on to the second one, Quantexa, as we've described, is by far the largest investment in our portfolio, and as a result, has become a significant part. And clearly, the board were conscious of the concentration represented and therefore the risk represented by Quantexa. And within that mind, we Albion were asked to look at how we could partially reduce our exposure. That is not to say that we have anything other than admiration for Quantexa. We are very positive about Quantexa, but as a sensible piece of housekeeping, we sought to reduce our exposure. So Albion were asked to go out and look for potential acquirers of a small stake, and on the back of that, we were able to identify some experienced private equity investors who acquired the stake at our carrying value, which was excellent news. And they did that through their investment vehicle, which is now known as Albion Growth Opportunities 2. And we, Albion, agreed to manage their investment alongside the rather larger residual stake that we hold through the VCTs. And this has been a fantastic return for the VCTs. So if we look at what was disposed of, the weighted average cost of that was less than 1 million. We made an 11.5 times return, and the enterprise share of the total consideration was 2.2 million. So a nice sort of bit of housekeeping, and I think a sensible step by the board to manage that concentration risk. Next slide, please. And thought I'd just give everybody an update on sunset clause. Those who've been on these presentations before will know that this has been a long-running focus to ensure that the VCT scheme is extended after its sunset clause in April 2025. And this has involved significant discussions with Treasury, with the government more generally, but very importantly, it also required European Commission sign-off. So where we are now is that the government has passed legislation that the sunset clause will be extended all the way until April 2035, but the legislation will come into effect now that the European Commission has just confirmed that they have no objection to the scheme being extended. So we're now waiting for that final Treasury commencement order for the sunset clause to come. So it is very close to happening now, which is great news. And then obviously with a change in government, we continue the engagement that we've been having for some time now with the new government, making sure that they have good visibility of all that we're doing within VCTs in terms of our very important role, which is backing high growth, innovative early stage companies in the UK. So some good news there. Next slide, please. Just touching on our broader strategy, I won't dwell too much on this, but we are early stage investors, but what we do is we back these businesses over time. We focus on what we believe to be long-term trends, whether that's software, whether that's healthcare. We do like business-facing businesses, so B2B businesses, and that's because we consider consumer to be too cyclical, too exposed to economic cycles, and as we've talked about, very much focused on software and healthcare. Next slide, please. ESG, just a quick update where we are there. So this sort of, if we split it between environmental, social, and governance, we continue to work at Albion towards net zero. So that's measuring our carbon footprint and then making sure that we have covered our carbon exposure. And then within the social, we're very conscious about greater diversity and inclusion within Albion, and we work with an excellent outfit called Fair HQ that help us measure and improve. We are involved with local activities such as supporting the local green space opposite our business, and more broadly, we've run a radiator accelerator, which is specifically there to support women entrepreneurs, women who might not otherwise have felt able to set up a business and raise venture capital. Governance is key to what we do. We are clearly very focused on, and not least because we are running listed funds. We are signatories to UN PRI, and we got a 4 out of 5 star rating in 2023. So lots going on, lots still to do, but definitely making the steps in the right direction. Next paragraph. Sorry, next slide, please. Max has already reminded everybody that he very sadly retires as chair at the end of this AGM, and I thought as manager, absolutely right that I should thank Max for all that he has done for not only Albion but also the enterprise VCT. So we've known Max for a very, very long time. He was appointed chair in 2006 when the Albion Enterprise VCT was launched. And just to give a sort of sense of scale, the initial funds raised, so all those years ago, was only 20 million. So it started a very small VCT. And Max has been absolutely instrumental in leading the board and helping Albion in terms of delivering very significant progress for this VCT over those years. Total shareholder value is now over £2, which is, I think, so a great milestone to reach. And also very importantly, this initial 20 million raise, the actual total net asset value of the fund is now 141 million. So the VCT has grown very significantly. And on a personal note, Max has been a huge support to me. He has always been fair. He's always provided challenge where challenge is appropriate, but he's also been very supportive of of me and the team that I'm fortunate to lead. So Max, a big thank you from the team at Albion. You've been an absolute star, and we're very much looking forward to working with Chris Burrows, who will be succeeding Max as chair at the end of the AGM. Max, thank you very much indeed from us.
Thank you, Will, very much.
And if we move to the next slide, prospects, I think, still sort of very much continuing to do what we do. You know, we can't get away from uncertainty. I hope the world is getting a bit easier, but just continuing to have that balanced portfolio, focusing on mission critical products, and avoiding exposure to discretionary consumer sectors. And we believe that that will continue to serve this VCT and indeed all Albion VCTs well. And importantly, we have a decent level of cash to allow us to make new investments and support our portfolio. If we move to the next slide, just wanted to cover electronic voting. The board is very keen to enable shareholders to vote and indeed encourage shareholders to vote. So we've been working to try and make that as easy as possible. Everybody is able to vote electronically now, and that's by signing up to electronic communications. And therefore you will receive emails before the AGM which provide full instructions on how to vote. And you can either do that prior to the AGM using the link in that email, but importantly, you can also do it, as Max has described earlier, through the Lumi platform on which we are currently presenting. So really keen to see as much voting as we can. And clearly, if anybody is having challenges or wants greater explanation, please contact the Albion team. And if we move to the next slide. So we've just announced, literally before this meeting, the interim management statement for the quarter to June. So this is the first quarter of the current financial years. And I'm very pleased to say it's been a strong quarter. And actually NAV has increased by 8.2%. So that's really good news. NAV is now up to 136p. Particularly relevant to this is the final sale of Egress, which actually completed the day after the quarter end, but to all intents and purposes had in terms of valuation has been reflected in that NAV. So that's been one of the key drivers of that good result. We've announced the first dividend of 3.14p, which will be paid on the 30th of August. And whilst the top three investments account for 40.5%, that does still include Egress. So you can expect that number to come down in subsequent quarters once Egress is no longer in the portfolio. So good news to end on. I think that's a strong return, and certainly we at Albion are encouraged by the opportunity that we see with the opportunities that we see within the portfolio. I think on that note, I hand back to Max for the Q&A. Max.
Thank you, Will, for your presentation and for your kind comments. We'll now answer questions we've received from shareholders. But before I do, I'd like just to say that we often have a number of shareholder queries throughout the year. And whilst we will do all our best to answer any substantive questions, shareholders will appreciate that given that this fund alone has an investor base numbering almost 10,000 shareholders, we're constrained by our resources to deal with all the specific queries we received. So the first question that comes in, which I'll deal with, was why does Albion Capital Group always file accounts at Companies House for all its managed VCTs before the accounts have been received, reviewed and adopted by the shareholders of the AGM? And the reason for this is that the timeline for filing public company accounts is very tight and was before the AGM was due to be held. Company law requires accounts to be only approved by the board. The AGM provides the opportunity for shareholders to receive and adopt the accounts. There's no requirement per se for the accounts to be approved by the shareholders. Second question is, has the board considered merging this trust with others in the Albion stable to achieve economies of scale? And on the 24th of July 24, the boards of the Albion VCTs announced that they have entered into merger discussions to reduce the number of Albion VCTs from 6 to 3. And these discussions may or may not lead to an agreement to merge some or all of the VCTs. If the mergers are approved, it's expected to achieve, amongst other things, cost savings, administrative efficiency and simplicity. for the enlarged acquired VCTs. And a further announcement will be made in due course. Will, a question for you. Why does the director's report on page 27 state that the combined Albion VCTs have only 8.5% interest in the voting rights of Quantexa Limited, when the truth is 9.5%?
Thanks, Max. I can only apologise for what is a very simple error. I'm afraid, unfortunately, the wrong number was put into things. These things do happen, not that they should happen, but they do with a 95-page report. So the number put in there was actually what's known as the fully diluted ownership rather than the voting rights. So a very well spotted by our shareholder. The correct number, so that everybody knows, is 9.7%. And we will obviously correct this in our accounts going forward. So apologies for that.
One for me, why does the note 20, related party transactions, not refer to the partial disposal of the company's investment in Quantexa? And what is the basis of valuation of the residual holding? This transaction has been covered in the manager's presentation earlier just a moment ago, and the board is satisfied that the accounts have been appropriately prepared and audited, and that the partial disposal of the company's investment in Quantexa is not a related party transaction within the meaning of the relevant laws and regulations. But we value all investments at fair value using an appropriate valuation methodology in accordance with the IPEV guidelines, the full details of which is set out on the notes to the financial statements on page 77 of the annual report. I have a question. If the chairman has not resigned before the AGM, will he withdraw his nomination to be re-elected? As already been announced, I am retiring at the end of this AGM, and Christopher Burrows will be your new chairman. It's admitted that the resolution 13 is unlawful by reference to and proper interpretation of sections 3072A and 3372 Companies Act 2006. Our lawyers have advised that the resolution is valid and in accordance with the applicable law. Further question that we received: what are the fixed term funds referred to in note 4 of the annual report and financial statements of the year ended 31st March 24, and where do they appear in the balance sheet? These are short-term money funds, and they're shown as cash on the balance sheet. So I hope that answers that question. Why do the board think it's appropriate to seek to limit shareholders' right to ask questions to just 2 questions, particularly when so few shareholders actually ask questions, and building societies who have millions of members do not seek to impose any such limit? Well, we don't actually insist on restricting shareholders to 2 questions. We have on a number of occasions had more than 2 questions from shareholders. We do like to try and make sure that shareholders do receive the chance to ask questions. So a number of shareholders asking questions rather than just a number of questions from one shareholder. So that answers that question. Will, for you, outside the remaining 2 largest investments, which investments do the board and manager currently believe have the best prospects to achieve good returns in the future?
That's always a very, very difficult question to ask an investment manager, but I can understand why it's asked. I mean, it's a bit like children. Having favourites is always quite tricky, and those that aren't the favourites then feel rather unhappy. I think the way to look at the portfolio is in aggregate. So if we sort of think about the top 15 companies, that is where we are, by virtue of valuation, seeing the most opportunity. So I would encourage shareholders to look through the portfolio and particularly focus in on the top 15, because they are the ones that are most likely to drive immediate value. That's not to say that there aren't lots of other, particularly smaller, more recent investments further down the portfolio, but the journey to delivering value will be a longer one because they're in an earlier stage of development. So I think in broad, so without picking favourites, but talking more generally, we are encouraged by those top 15. There's lots going on there. There's lots of activity, and as the recent quarterly numbers that I talked about at the end shows, with that sort of quarterly return, lots is happening in the portfolio, and there's lots for us all to be encouraged by.
Will, another series of questions for you. How is Radnor House coping with the VAT now to be charged on fees? And do you see this charge as a major blow to the investment, or can it be successfully absorbed?
Now, another good question, but obviously I am a little bit restricted to the extent I can answer that, because clearly we're talking about a school that will be managing a flow of information to their parents. But I think an important point to make in generality is that clearly VAT going on to school fees is not helpful. But we are very fortunate in Radnor that it is a very well run, decently profitable school in an area where there is plenty of demand for places. That said, we will see, we would expect to see pressure on the school as a result of this, and it will take time for people to adjust to the new norm, which is higher fees. But as many who like I have children at private school, schools are doing what they can to reduce the impact of that through recovery of that and cost savings elsewhere.
Thank you, Will. The sale of Egress seems to mean we'll now have a lot of cash. Will there be a special dividend?
So absolutely. So whenever we have large exits, that gives rise to the board reviewing the cash position, and having sought the recommendations of us as manager, and as you would expect, the board will be going through a process of assessing the cash levels and to what extent cash levels may or may not be surplus to requirements. So no decision on this has been made, but as you would expect, there will be a process to consider cash levels within the VCTs. It's obviously all still quite recent news, and there are lots of elements to consider when considering what are the cash requirements for a VCT. Managing liquidity is a major part of what we do. We have to think about buybacks, dividends, new investments, requirements of further cash in the portfolio. There are lots of moving parts, but that process will happen over the coming months in support of the board.
Thank you, Will. Did I understand correctly? Albion Ventures sold to another Albion vehicle. We're talking about Convexa. How did you agree the valuation, and how can we be sure that it was in the best interest of this VCT?
So just to refresh everyone's memory of what I said. So effectively, we sold it to actually very experienced private equity investors, and their investment vehicle is we've agreed to manage. So it is now an Albion managed fund. In terms of the board, as you would expect, would have looked very closely at valuation at the time. Importantly, it was sold at carrying value, and it was also after a very after marketing the stake to a number of potentially interested investors. So it was encouraging that a small stake was sold at carrying value, because the norm in technology investments is that if you sell a small stake in the secondary market, you would expect it to be at a discount. So your reassurance about valuation is obviously the scrutiny of the board. Clearly, the carrying value has been audited and had been recently audited, and in addition to that, the board sought the advice sought regulatory advice from Howard Kennedy, who are the VCT sponsor. So a full and thorough process went through to ensure that the transaction was both appropriate. The most important thing to remember is that is the objective of what we were doing here, which is to reduce the concentration of Contexa within the portfolio to the extent we were able to, and that is clearly a sensible approach. And then the other point was it was a very significant return achieved on that small stake. The funds still have a very substantial investment in Contexa.
Thank you, Will. I think we'll now continue with the formal business of the AGM. The full text of each of the resolutions were set out in the notice of the meeting, and the board is recommending that members vote in favour of all the resolutions. I'll now briefly summarise these. The first resolution is to receive and adopt the company's accounts for the year ended 31st of March 2024, together with the strategic report and the reports of the directors and auditor. The second resolution is to approve the directors' remuneration report for the year ended 30th March 24. The third resolution is the re-election of Christopher Burrows as director of the company. The fourth resolution is the re-election of Pippa Latham as a director of the company. The fifth resolution is the re-election of Patrick Reeve as a director of the company. And the sixth resolution is the re-election of Roderick Whitlock as director of the company. The seventh resolution is the appointment of Johnson Carmichael as auditor of the company to hold office from the conclusion of the meeting to the conclusion of the next meeting at which the audited accounts are to be laid. The eighth resolution is to authorise the directors to agree the auditor's remuneration. The ninth resolution is to increase the aggregate amount of the remuneration cap under the Articles of Association of the company from 125,000 to 150,000. The 10th resolution is to allow the directors to allot shares. The 11th resolution is a special resolution to give the directors the power to disapply preemption rights. The penultimate resolution is again a special resolution to authorise the company to make one or more market purchases of ordinary shares in the capital of the company. The final resolution provides the company with the option to have a 14-day notice period for a general meeting should this be necessary. That concludes the summary of the proposed resolutions. I confirm that the voting is now finished and that I now declare the poll closed. The results of the voting, including the proxy votes on each of the resolutions, will be announced after the AGM through a regulatory information service announcement. Additionally, the results will be published on Albion Capital's website as soon as is reasonably practicable. In the meantime, I will show on the screen the current proxy votes that have been received by the registrar, and as you will see, the proxy votes are comfortably in favour of the proposed resolutions. Thank you. That concludes the business of the AGM. I'd like to thank all members who've joined this AGM by webcast. The board welcomes any feedback you may have, which you can do by sending an email to aaevchair@albion.capital. As I have now officially retired, I'd like to thank all my colleagues for their support, friendship over the years, and to wish them and the company well for the future. There being no further business, I declare the meeting closed, and on behalf of the board, thank you for joining the company's AGM. Goodbye.